Hello, everyone, and welcome to the show today. I'm really glad everybody could join us. So today we're going to be talking about SIC codes and NAICS codes because I get a lot of questions about this, and I thought it'd be a topic that we would dive into. We've never really talked before about how you could get denied for financing or face more stringent underwriting guidelines just based on the SIC and NAICS code that you choose. So that's what we're going to talk about today. We're going to talk about the codes to avoid to help you have the best chance of getting financing. For those that don't know me, my name's Ty Crandall. I'm the CEO at CreditSuite. At CreditSuite, this is what we do. We help businesses get capital by helping improve your fundability, by helping you build business credit for your EIN that's not linked to your social, and also by helping you secure funding. So if we can help you along the way, feel free to get in touch with us. CreditSuite.com/EIN is a great free guide. And you can also give us a ring at 877-600-2487. So let me see if I can get this little bar that's on my screen off the screen. Okay, so let's dive in. So SIC code. So the SIC code, or the standard industrial classification, is basically part of a business classification system. Okay, that's actually what it's referred to. Now, it's a 4-digit numerical code that's assigned by the U.S. government to businesses. Okay, and I'm going to try to actually reduce some of this. Like I said, excuse me, I've got this little bar I'm trying to get off the bottom of my screen here so it's not a disruption. There we go. So it makes it easier to identify the primary activity of the business. And that's really what SIC codes were designed for. SIC codes were designed by our government for them to identify the classification of business you're in, basically the type of industry that you're actually in. Now, it's also an indicator of the kind of business a company that the kind of business the company's in. And again, that industry is why this was actually created. So the government could basically better segment businesses in the United States to know what industries they actually represent. Now, the SEC developed the system. And for example, if a company makes tires and or inner tubes, then the SIC code is 3011. So this is why it was created, right? It was created so our government, so the SEC, for example, could basically better recognize what industry these companies are in. Now, a range of industry groups correspond to the first of these 4 digits. So for example, a manufacturing corresponds to 4-digit SIC code starting with 2 or 3. The combination of the first and second digits then defines the major industry group. Now, again, maybe a little bit more in depth than what you actually are looking for, but I want to make sure that I cover all this. And this is pretty interesting. I think, for a lot of people don't even realize that social security numbers are the same way. The first 3 digits of your social security number really indicate the state that you're in. You can even narrow down almost the city that somebody's born if you understand enough about the social security system based on the actual code that you're presented. So same thing here. The combination of the first and second digits then defines the major industry group that the actual business is in. So in our example, 30, and then we have this example here of 3011 for a tire company. Well, 30 means rubber and miscellaneous products. So again, that 30 indicates the overall major industry group that industry is in. Now, the SIC code's digits are grouped to identify the industry and industry group. Remember, we just talked about that. First 2, last 2. 1 indicate the industry, second industry, the overlying industry group, the larger of the group. So the first 2 digits in the SIC code identify the major industry group. Okay, then the third digit identifies the industry group. Then the fourth digit identifies the actual industry. Pretty interesting, right? A lot of people don't even know how this works. So this is exactly how that SIC code is broke down, what each of those 4 digits actually means. Now, the IRS will use the SIC code you select. Okay, this is to determine if your business tax returns are comparable to other businesses in your industry. Okay, it's one of the reasons the IRS wants to look at it, right? If you're showing profits, if you're showing revenue and things that are so out of line with what your industry or your or what's comparable with an industry or an industry group, well, that throws up red flags, for example. So if your tax deductions don't reasonably resemble other businesses as well, then that's what triggers an audit, right? This is actually what triggers audits, is that they're looking from that SIC code of where you actually classify your industry, your industry group. And then if you're basically presenting tax returns that don't really are very much out of the norm of what they're used to seeing, that's what automatically then triggers those audits. So some companies may be labeled high risk when they do not select the right SIC codes to classify their company. And that's why I want to do this for you today, because here's what happens. You select the SIC code. You tell the IRS. You tell the Secretary of State. You put it on your tax returns. But what happens a lot of cases is people don't choose the best SIC code that fits them. And then they kind of let like the business credit reporting agencies decide it. Then all of a sudden they start getting business credit reports with all these different industry indicators. And then all of a sudden they're treated as high risk when they're not, and they don't understand why. Well, it's because you didn't choose the SIC. This webinar will help you actually choose the right SIC SIC code and know what it is from the very beginning. So again, that way you control the risk that you're in. You're not automatically put into an SIC code that's really not a good fit. So however, if you understand how the business classification system works, well, then you could choose the right one. You choose the right code that makes you a lower underwriting risk and a lower risk of a lot of other things as well. So the North American Industry Classification System, or the NAICS, is another business classification code. Now, this code classifies business establishments. It's to collect, analyze, and publish data related to the U.S. economy. Now, this industry code defined the businesses based on the activities in which they are primarily engaged. So let me tell you how this works. You have the SIC code, right? Now they've created the NAICS code, which drills it down more. And I'm not sure if I'll have a chance here to tell you the number of industries in each, but NAICS radically expanded the amount of industry classifications there were. Basically, as more and more and more industries have developed, it became harder to put them into the segments of the SIC code. So the NAICS was created partially to help reduce that problem. So the NAICS puts out its own list of high risk and high cash industries. Higher risk industries on the list include casinos, pawn shops, liquor stores, but it also includes automotive dealers and restaurants as well. Okay, so which code's used? Well, the short answer is they're both used. The SIC code system is being really phased out, and it's really being replaced by this NAICS. So again, you need to know both, but the SIC will go away because it had fewer industry classifications, and now we need that broader range. But for the moment, you really need to assume that both are being used, and as the transition is not finished, and quite honestly, it might not be finished for decades. So these cooling systems are similar but not identical. Okay, so lenders, banks, insurance companies, business reporting agencies, they're using both systems today. They use them to determine if your business is in a high-risk industry. Now, again, these are used for all types of things. We just gave some examples, right? So, for example, the IRS uses it to see if your deductions are out of whack, right? But in this case, for the purpose of this, because we're obsessed with helping you get money for your business, for this, we're going to talk about high-risk industry classification, because both of these are being used by underwriters, by lenders, to determine that you are high risk. Even you'll see the reporting agencies. Let me give you an example. I see business credit reports all the time where there's no credit on the report and people are given a failing score. And the reason for the reporting agencies is there's a lack of credit. And the second reason you typically see on those reports is that it's a high risk industry. So that means if they have your SIC or the NAICS, they think that you're high risk. Even if you have no credit, they'll give you a failing score because one, you have no credit, and two, you have no credit and you're in a high risk industry. So that's just one example of how reporting agencies are using SIC and NAICS to determine your high risk, that then makes it more difficult for you to get money and pay higher terms. This means you could get a denial for a loan or a business credit card based on your business classification alone, which does happen. Okay, I can tell you that I've personally been denied for merchant accounts for our business because they believe that we are in another business classification other than what we are. And just because they think our SIC is a high-risk industry for them, they avoid doing business. And then we have to clarify the SIC and NAICS we are in. And again, it becomes hard for them to argue that, because what we did was we determined what our SIC code was. So let's use CreditSuite as an example, and I might veer off a little bit. I think it makes sense here. So CreditSuite, we could obviously be seen as financial services, but financial services is high risk in a lot of cases. So we chose software. That's the SIC that we chose. It's on our tax returns. It's everywhere that we list our SIC. And then our business credit reports started to pick up other SIC codes. So we went to the reporting agencies and corrected them and said, no, that's wrong. Here's the correct SIC code. They said, sorry, we get it from a third-party data furnisher. And I said, sorry, we know who your third-party data furnishers are. Here's their reports. They show it correctly. Here's the Secretary of State. They show it correctly. Here's the IRS. They show it correctly. You're the only one that's wrong. And guess what they did? They corrected it to what we wanted it to be. So that helped us avoid paying higher rates and being risked as a higher risk business, because we controlled the SIC. And then because we reported it the same way from inception, we were able to take this documentation to the CRA, the reporting agency, and make them make the correction on the credit report. So some SIC codes can trigger automatic turndowns with lenders, higher premiums, and reduce credit limits for your business. So when considering any aspect of a business, risk has to be a major factor, right? There are inherently issues in every single industry, but some businesses are just considered to be riskier by their very nature. So I'll give you an example. In the business lending arena, restaurants are extremely high risk. And it's because like the failure rate, I'm not going to throw out a number because I don't know it off the top of my head. I can't remember it, but it's substantial compared to normal businesses. Like restaurants fail at a significant pace that's much higher than what normal businesses fail. So because of that, that SIC, that NAICS automatically triggers a lot of denials or manual underwrites by lenders that get applications from restaurants. So again, this is the case even with everything else goes off like a hitch and the business is prospering. And again, I've given you that example. We've run into problems with the same thing because the SIC code that they were classifying us was wrong. And then we showed them all the proof of what our SIC code was. And it was pretty tough for them to argue that point, right? Because they can come back and go, well, you know, I don't think that's the SIC you're in. And we're like, well, you know, don't know what to tell you. All the reporting agencies report it that way. Our tax returns report it that way. The SIC, the IRS, everybody else sees it that way. So you tell us, why do you think you trump the SEC? Why do you think you trump the IRS? Why do you think you trump the reporting agencies with determining what our industry is when they've already defined what our industry is, right? It becomes ironclad where they can't really argue that at that point because we have all the proof that we're in the SIC and NAICS that we are in. So risk is inherent with these business types, even if your business doesn't feel risky. Again, you're being judged based on others around you. Okay, and this is very common with comparison scores from the business credit reporting agencies that compare how your business performs against other industries in your sector. So a lot of ways these SIC and NAICS codes are used, and that's one of the ways. So you'll ultimately, if you pull business credit reports from the reporting agencies themselves, and you see 3, 4, 5 scores, you'll see comparison scores that compare you against others in your industry with the SIC and NAICS codes that they have that actually helps them determine what industry you're actually in. So why this matters, why risk matters? Well, the biggest reason why risk matters has to do with funding. There are several industries where lending institutions are hesitant to do business with. In those particular cases, there are stricter underwriting guidelines. But at least a company can get funding. It's just you might pay higher rates. You might face more stringent underwriting guidelines. So in some industries, no funding is available at all just because the industry is very high risk. As a result, those businesses need to find other solutions for financing like crowdfunding or venture capital because lending institutions won't give them. So these solutions can potentially include crowdfunding, angel investing, venture capital, business credit building. You know, these are the type of financing that it's not really based on SIC and NAICS. You're able to get this kind of money regardless of those classifications, but your banks, your credit unions, your alternative lenders, your peer-to-peer lending, you're ruled out in a lot of those just based on the SIC or NAICS code that you're in. So again, it's best to choose the right one so you can work with these lenders. You can work with the alternative lenders, okay? Because that is where the majority of money is actually coming from. So where are the lenders' ideas of the magnitude of risk coming from? Well, one clue comes from the CDC. Okay, so the CDC looks at risk in small businesses. Part of calculation of risk comes from the occupational injuries. But the other side of the risk coin is occupations that which are high in cash transactions. After all, think about it. A pawn shop might not have much of a specific risk of injury at all, but the large amounts of cash normally associated with it can mean a tempting target for thieves. Okay, so the choice of SIC code, as I said, is yours ultimately. For automotive sales, for example, you would normally select 5511. Or motor vehicle dealers, new and used. But most lenders will automatically turn your business down. That's because the high risk factor within that business classification name. Now, of course, you want to be honest with your SIC code classification, but if more than one applies, well, then there's nothing wrong with choosing the one that makes you the lower risk, right? And I used CreditSuite as an example. What are we? If you think about it, every dollar we actually collect from a customer is from our software. Our software is what's used to help people build business credit, to help people get financing, to help them become more fundable. So it's easy to classify us as a software company because we have a software development team. The biggest expense of our company is software development. Okay, every dollar we collect from a customer is because somebody has basically purchased our software. But think about it. We could also easily be classified as financial services. Isn't that what we do? We help businesses get capital. We help businesses get money. That's about as financial services as you can get. So we have a choice of what SIC codes we want, and we choose to go with software because that best defines what we do, because every dollar we collect is from software sales. And again, it also helps us become lower risk. So these are the decisions. Now, we're not lying, right? Because that's what we do. So you can't make up fake SIC codes and choose ones that are not in the industry you're in. But in a lot of cases, like the example I just gave you, 2 or 3 could apply. And in that case, you want to choose the lower risk of them. So if you want to have your automobile sales company, you need to develop a business which has, for example, auto and home supply, motor vehicle parts and accessories, or car washes. Then these can be written in the actual business code. So that way you can still operate your real business of automotive sales without actually being considered a risk factor. So what I'm saying here, and there's nothing deceptive or dishonest about it, the bottom line is just like I said. What do? We sell software, we handle financing, there's multiple options. Well, if you're selling cars, well, then you're an automotive dealer. But if you're also selling, auto and home supplies, vehicle parts, accessories, you have car washes, well, then what are you? Because you ultimately have 8, 9 different services that you offer. So you can actually choose the one that's more applicable to your business. So you want to check the SIC code database for more information on these codes. And you could do that at usbizdata.com. So that's usbizdata.com/SIC-code-databases with an S on the end, databases.php. So at usbizdata.com/SIC-code-databases.php, that's where you can actually see these SIC codes. So your business name can even be problematic because beyond coming up with a perfect memorable name, which is easy to spell and say, it evokes your company's mission statement. There's also the matter of risk, right? Adding a risky business type into your business name can ultimately also trigger financial or trigger financing denials, because then your name alone picks up that you're in a high risk industry. Okay, we deal with this all the time because our name is CREDITSUITE. So our name has credit in it. Now, we knew the risks coming in and we wanted our name to indicate what we do. We didn't care about the inherent risks that we would deal with on the financing side. But these are things you need to keep in mind and take a decision as you're choosing that business name. So for example, bails bonds are a restricted industry. So are many types of financing business types and check cashing agencies. Hence naming your venture Chico's Bails Bonds, well, that's a recipe for a delay or an outright denial, right? Because the high risk industry itself is in your name. So that throws up all kinds of red flags. But it's the same as with choosing a lower risk SIC code when to apply. There's nothing deceptive, illegal, or unethical about just naming that same company Chico's, right? So you don't have to put the industry you're in, especially if it's high risk, in your name. And if you avoid doing so, well, then it makes it a little bit easier for you to get the capital that you're looking for. So will a more generalized name or better SIC or an SIC code guarantee funding for your business? Well, of course not. Okay, but at least your business will not be automatically turned down. Look, I preach about this all the time. Computers are making decisions. They're determining if your loan should be approved. They're determining if your credit card should be issued. They're determining the rates that you pay and how much money you should be given. What you and I's job is to do is to understand how these computers work, what their algorithms are looking for. If you and I can understand that, then we don't want to lie and be deceptive, but we want to understand what they're looking for so we can then make sure we're serving up exactly what they're looking for, that of course is ethical and legal within the confines of what reality is, but gives us the best chance of getting turned down, getting approved, and not getting turned down. And again, Chico's in your name versus Chico's Bails Bonds is a perfect example, right? You have a choice there, and by choosing one, you're going to face a lower underwriting risk than the other. So before you can make that case for funding, these are things that you really want to talk about. So let's talk about some restricted industries. Well, these, amongst others, will get you an automatic decline: ammunition or weapon sales. Okay, energy, oil trading, petroleum extraction, gaming or gambling activities, loans for the speculative purchases of securities or goods, political campaigns, candidates or committees, public administration, city, county, state, federal government agencies, X-rated products or entertainment. Now, these industries are subject to stricter underwriting guidelines, but just because you're in them won't necessarily get you turned down. Auto, RV, or boat sales, computer and software related services, programming, dry cleaners, gas stations, convenience stores, limousine services, long distance or over the road trucking. These industries, amongst others, are subject to stricter underwriting guidelines. Mobile or manufactured home sales, phone sales, direct selling, real estate agents, brokers, real estate developers or land subdividers, restaurants or drinking establishments, taxi cabs. Okay, this includes the purchase of cab medallions, travel agencies, for example. So when we look at these, you have to keep in mind, a lot of people ask me, why are these deemed to be high risk? Well, in a lot of cases, when it comes to loans and lending, a lot of it just has to do with default rate. It's just that simple. As a matter of fact, we find some lenders that offer the exact same products. So let's say cash flow financing, where you can get money based on your cash flow loan. We find some lenders will sit there and say restaurants are high risk, and others will say restaurants are not high risk to them. Why? Because some of them have higher default rates with that industry classification than others. So if I have one lender, let's say lender A, that's never really had a problem with restaurant owners defaulting on loans, and then I have restaurant B that has like a large percentage of their restaurant owners are denied loans, well, then restaurant B is going to classify restaurants as high risk internally, while lender A won't. So again, you even see this broken down on a sub level based on lenders themselves, because they have seen defaults of a certain industry type internal versus other banks that haven't seen that exact same. So again, this is hard to nail down. It's hard to me just show you every single industry that's high risk, everyone that gets automatic declines, everyone that's subject to more strict underwriting guidelines, because even though I can give you generals here, the reality is it really is lender specific. And this is why you really want to consider working with a source that, as a broker, a CREDITSUITE, for example, where we work with everyone, selfless plug, right? And I say that because what we do is we help you figure that part of it out. We help you realize, okay, look, you might be higher risk in lender A, lender B is a better fit. And then we drive the application to lender B because we already know that from thousands and thousands and thousands of loan applications. That's just where it gives you an advantage working with. Maybe it's not CREDITSUITE. Maybe you want to choose a loan broker or whoever it may be, but you work with somebody that has experience here because they can help you determine which lenders may be better suited for your industry than others. So let me give you an example. Let me give you two. A lot of credit repair customers are our partners, a lot of them. And they offer business credit financing through us. So as a result of that, we do a lot of financing for credit repair. Now, you're going to go to a lot of brokers, a lot of banks, a lot of people that tell you credit repair is an outright restricted industry. You're not going to get money in that industry. But what we've done is been able to work with our lenders and say, listen, give us a chance. We do a lot of volume through you guys. We believe in this applicant. Give them a chance. And then we talk to them about what credit repair is, and we explain what the industry does, and we make them feel safe, and they give the person a chance. And guess what? The person performs, and it performs well. So we send them somebody else, and we send them somebody else and somebody else. And before we know it, we've got these lenders that will do that industry with no problem, because even though they're looked at in general as high risk, specifically based on their own performance, they're seeing they're not high risk at all. Okay. And so that's why you really want to make sure you're working with somebody that knows what's going on, because in a lot of cases, that's how it works. That's how it's created, where some industries are able to get money versus other. The marijuana industry is exactly the same. We have so many lenders that do just the marijuana industry. That's all they do. But there's plenty of other financial sources that won't even touch that industry code. So you really want to work closely with somebody that can help you in your industry if you're higher risk, because they can decide the lenders that will help you versus the lenders that won't. So let's wrap this up. Risk matters when looking for funding. We all understand that. Some industries are just coded as high risk or restricted. Sometimes it's individual lenders that do that, and sometimes it's the lending industry as a whole that deems those codes to be as high risk. There are honest ways at least make traditional funding possible. And we talked about some of those ways, right? We talked about some of those ways where you're choosing an SIC because there's multiple to choose from that best fit your business. You're not putting high risk indicators in your business name as some examples. But business credit, as always, is a great alternative. Remember, crowdfunding we talked about, venture capital, angel investing, they don't really care as much about SIC and NAICS, and business credit cards don't too. So you're still able to go out and get the $10,000 Visa or the $40,000 Amazon credit card without some of those higher risks. And that's one of the beautiful things I love about business credit is, it's not industry specific. You can be in a high risk industry. You could be a startup. You could be a nonprofit. All these things that prohibit so many people from getting funding, you're able to bypass all those with business credit. Okay. And again, that's because they just don't have those kind of restrictions. So There we go. A lot of it, right? We talked about NAICS codes. We talked about SIC codes at a micro level. I mean, we even broke down what the digits in the actual code mean. Okay. We talked about the ones that are higher risk, the ones that you're not going to get approved at all, the one you're going to face more underwriting stringent guidelines. We talked about how to avoid those things and what to do with your name, how to choose the SIC code, make sure the IRS, the Secretary of State, the reporting agencies have the right one. I talked to you about disputing and everything you need to know now about SIC and NAICS codes. So if you have more questions, well, then get in touch with us, 877-600-2487, or email us info@creditsuite.com. Also, don't forget to grab our free guide on business credit building at creditsuite.com/EIN. If you're watching on YouTube, if this made sense to you, like, subscribe, please help us out. Okay, if you're listening on our podcast, this made sense, you like it, then please leave us a quick review. It means so much to us. I can't tell you how much it does. And if you want more tips and tactics on growing your business, getting capital, building your business credit, getting financing, well, visit us online at creditsuite.com. The top right of our page are our social media links. We go live on Facebook weekly. We go live on YouTube weekly. We have daily tips on places like Twitter and Instagram as well. You can even listen on the go to our podcast, The Business Credit Financing Show. So again, this is Ty Crandall with Credit Suite. Thanks for tuning in. Make sure you get in touch with us if you're interested in getting capital for your business, or if we can help you with any way with making sure you have the right SIC and NAICS codes to make yourself as fundable as you can be. Thanks, everybody. Have a great day.